Okay. Hello again, everybody. It's Harry Boxer, the Technical Trader. And David, before we start, I just want to put up my, I don't see the share screen there. Where is that damn thing? I wanted to put up, oh, there it is. I'll share my website. You should be seeing that momentarily.
Oh, okay. Okay.
Is it up?
Yeah.
Oh,
Yeah.
okay, great. All right. We can get going. Folks, I'm Harry Boxer, the Technical Trader. I've been doing this for over 5 decades, and we have a website called the techtrader.com. It's one of the first trading rooms ever established on the internet back from 2001. And I've been doing this for 25 years, but double that in terms of total experience, including uh, several years on Wall Street as chief technical analyst for 3 different firms. Um, and way back in 2000 in particular is when I started to realize that technical trading works on old time frames, and that why risk overnight stuff, particularly when you have a volatile market like we had in 2000. So I decided to focus on intraday stock patterns using 1 minute time frames. And you can see the chart that I'll show you the chart in a moment of some of the, I'm going to give you some examples from today's trading and how we do things. But I just wanted you to know quickly that you can join for free on my site for a 2-week free trial. Just sign up, no credit card necessary, and come join me for a couple of weeks, and you'll see what we do at thetechtrader.com. Anyway, that's my quick spiel. There is something else I want to share, and let me get to that screen. There it is. Okay. All right. Let's start off by saying that today's topic is going to be preparation, focus, and discipline. I think that 3 keys for successful trading, particularly day trading, is to do 3 things. First of all, prepare properly, focus on what you're doing, and have discipline on your trades. And we'll get to that in a moment separately. But to me, those are the key 3 things, the 3 keys on successful day trading. I approach day trading as a disciplined process built on preparation, pattern recognition, and execution, rather than impulse or opinions or emotion. Each morning begins with identifying stocks that are actively moving pre-market. Those stocks that are showing strong price and volume expansion, because I believe opportunity comes from momentum, not just randomness. And by building a focused watch list in advance, I eliminate noise and concentrate only on the best candidates, even in the pre-market before we're even open. Be surprised at my site how many people make a lot of money even before 9:30 Eastern, when the market opens up. We've already made several trades. One of the things I wanted to show you, and I'm going to switch again here, Dave, is I want to switch over to my site, which I don't see on the board. There it is. Okay. When you come into the room every morning, this is what you'll see. On the left is the trading room. On the right is where I post my charts. I don't have them up right now, but that's usually where you'll see my charts. And, I'm doing constant, nonstop updates, live webinars where I come on, show you the charts, show you the patterns as they're developing, and not only in pre-market, but I do a pre-market, several updates. I do updates every 20, 30 minutes, sometimes later, sometimes more often, depending on what's necessary from the market. But you'll see me going over the charts, drawing my lines and my trend lines and support and resistance levels. And when I give you a trade, I not only tell you what to buy, I tell you what the support, resistance, and targets are, and where to exit and what the stops are as well. So you should be able to make money on my site, because not only am I giving you the ideas, I'm telling you what to buy, where to buy, where to sell them, where to buy them, and where the support and resistance is. So if you pay attention and you're disciplined and focused and you prepare properly, I do the preparation for you. That's the beauty of my site. I get up, I'm in the on the West Coast, and I get up at 3:30 in the morning. I'm literally on my site by 3:45 in the morning. And I'm literally talking to my people and showing them charts pre-market until the market opens, and even after the market opens. But reason I wanted to show you my trading room is because on the left, you'll see something that you see 4:08 a.m. in the morning, my early watch list. I went over it, hundreds of charts between the time I got on and between the time I posted this. And then I give you a list of what we call my watch list. These 15 or so stocks I felt had pre-market patterns that were promising enough to post them as watch lists so that you can get them on your computer and you can post them on your list and you can get them on your list so that you can follow along with me. A little later in the day, you'll notice that there is something called a focus list. Well, I will cull that list down to a list where I think is much more reasonable, and it is right there. I had about a dozen stocks or so on the list this morning, and by the time the market opened, I put out several buy alerts, which is in the top part of the room. Here you'll see the buy alerts. Datadog. Let's go over that real quick. AGL, those first two were phenomenal trades that day for today, just for today. Let's go over that again. I'm going to switch charts again and share my TC2000 charts. And we'll start off with DDOG. And I'm going to show you why and what happened. Well, first of all, when you go back, it's easy to look at it from where we gave it to you, right back in here. Now, Datadog exploded on a very, very strong earnings report. I told all my people, let's wait for the first pullback. And we got down about 174. I entered a buy on Datadog with several targets. If you look, those targets were 184, 188.90, and above. I wanted to show you how that progressed. You'll see it didn't do anything for a little bit and then took off. From the wedge or coil and broke out. From the flag and kept going and then spiked. Get this, folks. 196, 97, 98. So we gave it to you 174, and within less than 2 hours of 198, 24 points. Now, that doesn't happen every day, but it's a beautiful trade, and we took the trade. For the rest of the day, here's what happened with it. You could have stuck with it if you wanted to, but it came down, went sideways, and coiled all day. So there was no reason to be back in the stock because I never broke back above this line that I call your resistance line. Now, several of us were watching for it, but it never happened. So the bottom line is that it was an excellent 24-point trade, and it took only about, I would say, 90 minutes. AGL, another example from my focus list this morning. And the reason I had a focus on it is because of the pop and the coil. Now, these are all 1-minute patterns, folks. I came in this morning, stock had popped and done this. I decided not to wait for a pullback because I felt like even if there was one, it wasn't going to be much more than anything shallow. So we bought it around the 40.5, 3/4 range. And here's what happened the rest of the day. Before the market even opened, it went to 43 and change. It then went sideways, formed a flag. Continued to firm up. Even before the market opened, the stock moved to 44. And it backed off again, got real quiet ahead of the opening. Check out the opening. Right there. It popped to 48. Now we're in the stock here at 40 3/4. We already have almost 7 points in it, or more than that. But that wasn't where we stopped. My targets were raised at that time to, I think it was 53, and then 58, and then the final target was 64. But let me show you how this thing progressed during the day. Now, obviously, we don't see these trades every day, but today happened to be a good day for trading, despite the fact that the market wasn't that great today, was it? It was in downtrend most of the day. But we had stocks trending. That's what the thing about trading, day trading, is that it doesn't matter what the market's doing. There's always stocks running. Take a look at this. Rising channel, kept making new highs, and finally it got just under 64. The high was 63. 87. I mean, within pennies of my target. But from where? From 40 to 63, another 23, 24 point. There were two stocks we had today that went up 24 points in one day, all based on technical analysis, all based. I knew that both of these had good reports, earnings reports, or whatever the news was. Just so you know, I'm a technical analyst. I follow patterns. Do I pay attention to news and earnings only when it affects the stock that day? Or if I'm swinging something, obviously I want to know more about it too. But today when I saw the spike up, and not only spike up, this is a gap. Go back and show it to you one more time. Yesterday it closed at 27.81, and this morning pre-market it opened at 37.10, $10. And within a couple of minutes, it was 41. It was up 14, 15 points. Pre-market, like right after the market just started trading. And of course, I'm not there that early. I'm not. So I usually wait to see what patterns develop. I look for coils, flags, consolidation, continuation patterns that are telling me the stock is digesting the gains and is ready for more. And that's what we saw with this stock and the prior one as well. Look at that beautiful bull coil right there. And this is called a bull coil because what happens is the tops narrow, they get lower, the bottoms get higher. And right there, it's called the apex. Usually you want low volume at the apex or hardly trading. But notice that during this period, the unbalanced volume was not coming down. It was actually firming up a little bit. It should tell me the stock was being accumulated. And there was more powerful buyers than sellers on this stock at that point. And that's in addition to the pattern itself, looking at the underlying indicators and technicals, you can gauge whether or not it's ready to go. And sure did, didn't it? Now, you see at the end of the day, it definitely went sideways. But on the day, net, this stock had a monster session. And it was up 116% on only 3.8 million shares. 60.31 close, up 32.46. Fabulous move. And that was just another example would be ATRA. Now, the stock popped early. Let's go back and take a look at it. And started to form what we call a falling channel or flag, a falling flag, whatever you call this. It doesn't matter what you call it. It's what it does after. I told everybody if it gets to 760 and breaks that declining tops line and the volume weighted average price or VWAP, the started line right there. As soon as it went through that, I think I said 770. I said look for 770 and a breakout, and we had targets on that. I think it was at 8.5, 9.25, and 10. If I said depending on volume, of course. Now take a look at this. Pop breakout with volume, no less. So that tells me it's going higher, not just a spike up. Now, sometimes it'll get up to the prior high here, install, and or consolidate or back off. Let's see if it did that. It did indeed, didn't it? Which created a triple top. I told my people to hang on and raise your stops to preserve your profits and or your position. I think it was 7.5 is where I said raise your stops to. Or we had it there, I kept it there. So look at that, held it right there. That looked like a little bear flag. I was very concerned about it, but the volume was very low. We had that low volume ebb I talk about that you want to see before stock moves. Boom, bang, about 10.5. And the channel top in a 1, 2, 3, 4, 5 wave LA wave move. Most of us sold it in the 10 range, getting in at 770. Not a bad trade, eh? Here's what it did the rest of the day. And then at the end of the day, it broke out just before the close and got up to 12.45. I had a 12.5 target, pretty close. And the reason I had 12.5 target, I drew my lines across the top on a parallel channel. It came right to about 12.5. I got right to it, and then it collapsed. Luckily, most of my traders who were in it got out at 12 and above. we had a lot of good trades today, but I wanted to really focus on those in particular stocks that tend to want to really trend. And a pre-market pattern on AAON, same thing. Oh, but the stock was so damn strong, I couldn't even get a pullback entry opportunity. Instead, I told my people, even though I never gave them a formal buy on this, I said, this is a very, very strong pattern. And with a rising flag, should it break out of it, we can make a quick trade on it. Well, it went from 127 to 144, 17 points, and it didn't take a half an hour. Then it consolidated, even went higher to 149 or so before, you can see how it whittled away towards the end of the day there. But, that's the kind of stuff we look at every day at techtrader.com, and the kind of charts that I want to be trading, each and every day. RXT was another example. Now, when a stock pops like that and drops like that, you want to be careful. But if it should pop right back and take out the high, that's where I put a trade on it. When it broke to 3, my target was 350 and 390, maybe 4. 2 hours later, it was 462 from 3. And that's a 50% move in multiple waves up. 1, 2, 3, 4, 5 waves. So on the 5th wave, we always tell people, I want you to sell the 5th wave. Anybody who was fortunate enough to hold it to 462 made a huge day trade on that one, too, percentage-wise. So those are just 3 or 4 examples of stocks that we traded today. And yes, there's always ones that don't work too. Those are the ones that worked, of course. So, my decisions are driven primarily by technical patterns. As you know, I look for formations such as flags, wedges, and breakouts that repeat in all time frames. I use them to time my entries with precision. And rather than anticipating a move, which I tell people never anticipate, wait for the confirmation, specifically a price volume surge that pops across a resistance level. In the case here, take a look at this. Here, we have a wedge pattern. If you didn't buy it here when it broke out, and you saw this little coil near the VWAP, notice how low the volume was? The volume picked up here, the stock popped, it was a buy right there at about 350. And of course, less than an hour later, it was 460. So if you didn't catch the full move, you should have caught 75 cents to a dollar on it right there. And so part of what you get from my site is constant live webinars where I go over these charts as they're progressing during the day. I show you the patterns. I tell you what it may occur depending on, what kind of movement we get, what kind of volume we get. In this case, it popped to resistance and pulled back again, testing the moving averages one more time along with the volume weighted average price, and then popped yet again. You could have literally traded this once, twice, 3 times during the day. Excuse me. And so, what the watch list does, what I create the watch list, what that does, it eliminates the noise and we can concentrate only on the best candidates. Yeah, nothing's going to work all the time. So we get breakdowns and stocks are stopped out. We had a stock this morning that I said, you better, this is too volatile. Check this out. You're not going to believe this one. Oh, that was yesterday. I'm sorry. This stock yesterday popped up, gapped up, and I said, we're putting a stop right there underneath 180 if it breaks down. The damn thing went to 8 cents. I don't know what happened or why, but it got completely destroyed. And so obviously the stop saved everybody in the room. And I told everybody, thank God for stops, because sometimes there's a guy in my room that's been with me for 20 years, and his favorite expression is, the best trade I ever made was a well-placed stop, because preservation of capital is the key in trading. You can't let a stock go down and buy more. Don't average down, always average up. Why do you average up? Because if a stock's breaking out and trending higher and breaks through a key resistance level, you should add more. Instead of selling it, you should add more until it hits your target or rolls over and takes out support and or your stops. And rather than anticipating the moves, I always want to wait for that move. I always tell them wait for a pullback and then wait for a confirmation. Like for example, in the case of AAON today, where there was very little, no pullback here at all. Confirmation was a breakout above that rising flag. Rising flags are very powerful about it. When you see them, and they're not too common, they usually extend. Another stock we traded today was HIMX, and here's why. They exploded, and I watched it implode, but I also watched it bounce and create a wedge. And I said, if they take this level out right there, it's a buy. So we went long at about 15 and a quarter, and it was 16 and three quarters or $1.50 within, let's call it within an hour. If you didn't sell it near that prior high because resistance was there, you got this pullback. Here's what the pullback told me. That it was a double support level, trend line and lateral price support. And man, when it held there, look what it did. Reversed from 1489 in minutes with an explosive move to 1773. Then had a rising wedge, which I thought was very potentially positive, but I raised my stop to right about there at 17. And you can see it's now 15 three quarters. So you saved yourself some angst by stopping out at the proper place. I'm pretty good at targets. I'm very good at stops. And I think that in the room, I prepare you so properly that if you come in, even on a free trial, you'll probably be able to make enough money to cover 1 year subscription. Oh, and by the way, part 2 of this webinar is going to be, I'm going to analyze any stock that you want. And so if you want to put out symbols for me to look at for a little later on, but if I have time, whatever time I do have, I'll be able to do that for you. Okay, let's move on. I want to talk about once you're in a trade, what's the key? The key is how to manage the trade. Management becomes a priority. Basically, I think most people don't know when to sell something once they have it. And they always hear, and I hear this all the time, I had a great stock and I sold it too early. Why'd you sell it? Well, I had a nice profit and I didn't want to give it up. Why not put a stop in? Well, where do I put the stop? Under key support levels and under key moving averages and trend lines. So intraday, for example, in this case, once you're in a trade like HIMX and it breaks out here, you immediately raise your stop to there. And when it pops and pulls back and starts to move again, you raise your stop to there. And when it spikes up and pulls back and starts to move again, you raise your stop to there. So that when it rolled over here, you're stopped out. But you're protected at a profitable level. That's the key to trading. You cannot trade actively markets, especially day trading or swing trading, even for me, in my way of thinking, without properly placed stops. And this theory about 8%, 10%, 15%, there's no such thing as nothing logical tells me to put a percentage stop in. And I once had a very, very close, very successful guy in trading, really knew what he was doing, but he had the weirdest stopping point. I said, why do you use 8% stops? And I said, over the years, I figured I don't want to lose more than 8% in any trade. So he would, once they got in profitable mode, he would look where 8% was and he would put a stop there. And, sometimes it worked, but a lot of times it didn't. And you got stopped out for no reason and the stock kept going up. And my way of thinking is what I just told you. Stop below the prior pullback low. If a stock's trending and makes 1, 2, 3, 4, 5, 4 or 5 higher lows, it's in a trend. Milk the trend. Continue to milk the trend and make sure you get as much out of it as you can. No one's buying at the low and no one's selling at the high. One time in my 50 some odd year career did I sell a stock at the all-time high. Why? Because I put it in market at opening because it was halted. So it was at 15, it opened at 18. Trading was halted, and from there went straight down. But I got out at the opening at 18. Never saw that price again. So my point being is sometimes you get lucky and you sell a stock at the all-time high where you buy it at the all-time low, but that's so rare. I just want a big chunk in the middle, a big piece in the middle. For example, from there to there on any stock. In the case of Datadog, stop there. It kept going until finally here is where it broke. But by that time, we were long gone because of the multiple waves up and because it reached our targets. The other thing you can do is if you draw a trend channel and the market takes out the channel, you might have been stopped right there. For me, the actual support level was right about there. You notice that it wasn't broken until hours later. I don't want to sit with a stock for hours when I can be in something else that's moving. So once you're in a trade, again, trade management is the key. I define for you support, resistance, targets, and stops in advance. And as the trade develops, I adjust them. I will change my trend lines. I will move the targets. I will tell you to raise your stop. Or I will say, target number one has been met, sell half your position here and raise your stop to here. Okay, here's your new targets. If a stock goes to the second target, I continue to monitor the trade and tell you where you may want to raise your stop to. The point being is that as long as the stock's trending, you should stay in the trade until it either goes against you and you're stopped out, or it reaches your target zone, target levels, and you're taking it out. I believe in 1/3, 1/3, 1/3. I like stocks in the 5 to 25 range because I can buy 5 or 10,000 shares and sell a couple of thousand at a time at each target, or at each level, and then keep raising my stops. And so many times I've had 3 different targets. The first 2 were met. The third one wasn't. The stock came down, broke support, but even that I was stopped out at a profitable level. And the combination of the 2 profitable trades and the one where I was stopped created a really strong trade for me that day. And you can always go back in. That's the one thing psychologically people don't do. Once they're out of a stock, once they're stopped, or once they sold the stock, it's amazing the human psychology that won't allow you to buy that again, especially if you lost money on the trade. I can't tell you how many times I saw a stock pop, pull back below my stop, and then immediately go back up and break out. And I went back in. Very few people do that. Very few. It's human psychology. Once a stock goes against you, you rarely buy it again that same day. And it may be minutes later. Okay. The other thing is that most people don't do is they anticipate, and I'm telling you, anticipating will kill you. For example, and I'm going to give you a lousy example, but EZGO, that stock that got crushed, at what point was this a buy? You think it's, oh, look how oversold it is. Let's buy it. Look how oversold it is. Look how oversold it. Once the stock goes against you, you don't want to be in that stock until it turns around, breaks the trend, breaks at least one prior high, and shows you that the trend is turned, especially if there's heavy volume. If you get a heavy volume surge on a snapback that breaks the resistance, that's your go signal. Again, my decisions are driven primarily by technical patterns, period. Once I establish why a stock is running up, I look at the pre-market earnings or the biotech FDA approval or whatever the good news is, a contract, whatever it might be. Then I know that the stock is going to have some sponsorship that day because there's a lot of interest in it. And you often will see a stock 10, 15, 20 times normal volume. If you go to TC2000 here, you'll see something called post buzz. During the day, it's called volume buzz. And that tells me at any one time, in the case of RXD, for example, it's trading 900% more volume than average in after hours. But in the morning pre-market, when that stock is trading 500, 5,000, 10,000% more volume than average, and the average is over our last 100 days, then it tells me that something has shifted of a positive nature, and there's a lot of sponsorship and volume coming into it. Once the trend is established and the stock takes off, once that occurs, you want to stay in the trade. Just continue to manage it properly. How do you manage it? Well, make sure you know where your support, resistance, targets, and stops are in advance. By the way, on the subject of stops, I will tell you right now, I don't care how good a trader you think you are, human psychology will will let you change your mind if you don't put a stop in. I want a hard stop entered. I want you to have that stop not in mind, but entered with your broker. It's just too easy to change your mind when a stock's going against you or for you, especially when they break. Oh, it's not the easy thing to say is, oh, it just broke support by a few cents. I'm going to hold on to it, and then it's another few cents, and then it's another few cents, and you're stopped out, and the stock just keeps going down. And what do? You buy more, which is really dumb. Okay, when you have a stock that's declining, you only buy more when it turns around with big volume. Then the downtrend or the down channel intraday, reverses and goes to the plus side. So the key is managing your trade and adjusting as the trade develops. You must continue to continually raise your stops and do and change your trend lines and your support levels and keep moving them up and down when need be. Know where your VWAP is, volume weighted average price, because a lot of traders pay attention to it. Know where your 10, I use 10, 20, and 50-day moving averages, and 10, 20, and 50 period moving averages, because obviously intraday charts, it's not 50 days, it's 50 minutes. It's another really good example of a stock that this morning popped and had a rising flag. You see that rising flag? You don't see them too often, but I just mentioned to you that when you see it, and often, very often, is a precursor to a bigger move. Here it goes from 668, and within a half an hour was 817 for $1.50. If you held it, because it didn't break support, because support was right there, right? That's where you put your stop, right there. Came down to the VWAP and bounced and made a higher high. You had a choice at that point whether you wanted to sell it or not. Or you held it and you were finally stopped out there, which is really a bad trade. I always tell everybody, when you hit a target, sell a third, sell a third, sell a third. Or sell a third, and put your stop under there. So that even if it broke down there, you'd be protected with a either nominal profit on the third tranche or a break even or slight loss. But the bottom line is the total trade for you is a profitable one. That's the most important part. Okay, so one of the methods I use is scaling in and scaling out. I don't understand human psychology. Well, I understand it, but I'm not clear why people don't understand it. If you make a decision to buy something and you want to put $10,000 into it, why do you have to put it all in at once? What if you're wrong? What if you're right and you had a third of the stock? Would that be so bad? And if it broke out over the prior, for example, say you bought it here on the breakout above this high, above there, and then it came down and broke out again. You may have bought more here, but you wouldn't have been hurt because you weren't stopped out, and the stock eventually went from about 750 to 836. So you didn't get hurt. But the point being is, I always average up and I scale out a third, a third, a third. For me, that's the best way to do it. You have 10,000 shares, sell 3,500, 3,500, and 3,000, and be out of it in tranches. Or, have stops on each third and continue to go with it until it's either sold or you're stopped out. Trade management is more important, almost more important, or as important as what stock you pick. Because even a bad stock, if you manage it properly, will give you either a small profit or a small loss. The key is never take a big loss. Ever, ever, never, ever take a big loss. You have to protect your capital so you can trade another day. Too many people get blown out quickly and they're out of the market. If you don't know what you're doing, it's easy. You come into my room, I do all the preparation for you. I tell you what the focus list is, what stocks we're watching, which ones are buy alerts. I issue buy alerts with stops and targets and everything. And I make life easy for you. Again, just come join me for 2 weeks for free. Not even a credit card. Just come on down. Okay. Um, Again, scaling in and scaling out allows me to reduce risk and participate in an upside. And I'm constantly emphasizing cutting losses quickly while letting strong trades run. Too many people do just the opposite. They sell their profits, they hold on to their losses. The losses get bigger. I mean, human psychology is. And the other thing that I never ever understood, the stock is 8 and it drops to 7. And when it gets back to 8, you're immediately selling it. I want to break even. Are you trading to break even? You're not trading to break even. You're trading to make money. So if a stock went from 8 to 7 and you didn't get stopped out and it moved back to 8, why not hold it for 9 or 10 if it's going to move, especially if there's volume? Now, if it got back to 8 and it acted on low volume and it didn't act well, you could always kick it out either at a break even or a small loss. I'm okay with that. Or raise your stops or tighten your stops to a point where if it goes down, then you protect it. And if it doesn't, let's just keep riding the pony. Okay, I think that most traders struggle not because they lack opportunity, because they lack discipline. The number one thing about it is it's so hard to be disciplined because here's the problem with stock trading. It's called human emotions. I'm a big believer that the trend is your friend. The trend will tell you what to do. Don't anticipate, wait for it. Don't get emotional. My brother-in-law passed away at a young age, but it was a great trader. Always said to me, it takes a cast iron stomach and testicles of steel. It really, you got to have the kind of emotional discipline, and it's hard to get, especially if you're type A person like me. It took me 20 years of struggling with the market, making money, but not as much as I could or should have, because I wasn't as disciplined and I was too emotional. You'll notice that the best golfers in the world, other than maybe Tiger Woods and John Daly, are pretty low key, mellow kind of guys, and they are focused and they're disciplined and they don't get too crazy. There's other people like Phil Mickelson who gets emotional too, and Jordan Spieth, for example. But the bottom line is most golfers, I would say 95% of golfers who are really, really good, have discipline and don't and know how to control their emotions on a golf course. Well, you got to do the same thing in the trading day. You come in every morning, you get excited, stocks are exploding out of the gate, and you jump on stuff. You're jumping on stuff, and you're not even sure why. You get excited, and once you're in the stock, you see a stock go up 3 or 4 points, and it goes down a quarter, and you get excited, you get nervous to sell it. Every stock, there's no such thing as a stock that goes vertical nonstop all day until the end of the trading session. Excuse me, there's going to be stops along the way. There's going to be consolidations. Any chart I showed you today, for example, let's go back to them. AGL, choppy all day, but on the way up, though, right? ATRA, I mean, very choppy, very. RXT, anything I show you here has got a pattern of running up and pulling back and consolidating and coiling, et cetera, et cetera. So there's nothing perfect out there. Datadog was a beauty today. We loved that one early on. 24 points there and 24 points there on AGL. Yeah, that was a good day. So again, discipline. First of all, preparation in the morning. And I do all of the prep for you. So all you got to do is be disciplined and focused. And look, the beauty of my room is you can send me a private message anytime or just put a message in the room itself and I'll answer you at all times. Nobody's questions go unanswered. Only thing I'll ask you is don't ask me a question while I'm talking on an update because it's disruptive. Okay. Success comes from staying focused, following the trading rules, removing emotion from decision making. I know that's the tough one, but you got to learn how this is. Stocks are like a bus. Every 10 minutes, another one comes along. I'm serious. That's one of my favorite expressions. There's always the next idea, the next idea, the next idea. And the other thing is never, ever, ever lament or pat yourself on the back about a trade. Do I think you should keep a trading log? Absolutely. Every trade you have, before you put it into a log I'm buying 1,000 shares at $5 a share. Here's my target, 550 and 6. My stop is 470, so that you know all of that and have it in writing in front of you. Not just because you'll have the ability to manage a trade, but learn from your trade. At the end of the day, review all your trades, especially the losing ones. Know what you did wrong and why. You'll know when you look at it. You'll say, yeah, this is a mistake. Or that was the right kind of move, and I got to do more of that and less of that. I think the number one thing that people don't realize is that a trading log is your biggest educational tool that you can self educate yourself. Now, I'm pretty good at teaching people technical trading and technical patterns, but there's nothing like learning it yourself. They say that 2 months in my site is like 2 years in a classroom because I'm constantly educating people on the patterns. I'm correcting them when they use the wrong terminology or when they interpret something as something else other than what it is. Not that I'm the expert, but I've read every major book on trading there is. And I know most of the big traders in the world, and I've talked with them and interviewed a couple of them. I think what I do is as good as anybody out there, and I invite everybody to come join me. So success comes from staying focused, following the rules, and over time, consistency. Applying these principles will transform your trading from a guessing game into a structured, repeatable process so that every day you can come in. And that's another thing people are always asking me, well, how many trades should I be in at a time? You only need to have one trade a day. But I tell people that if you have a large portfolio with 100, 200, 300,000, yeah, you want to put in 40 or 50 grand per trade, 3 or 4 stocks at one time, that's difficult if you're a pro and you've been doing this for a while. That's not hard. But I always recommend, excuse me, never more than 2 or 3 trades in a day. You don't need to have more than that. If you do it right, if you have enough stock, you're not trading 100, 200 shares. If you're trading some volume and you're making some cash because you've got 50 cents, $1.50 on 5,000 shares, you're making 7, 8, 10 grand per trade. And that's what we strive for at the site. Where a lot of my people are making $500,000 to $1 million a year trading. They're retired from their jobs. And they're just doing that. I have people with me over 20 years. One gal came in who's still with me 3 weeks when I started after the site in July of 2001, and she's still here. Amazing, huh? So I don't have, that's about it for me. I just wanted to give you my take on the process, the proper process for you every day in terms of preparation, how to prepare, focus, what you should focus on, and being disciplined and following the rules, which include the stops and the targets and the scaling in and scaling out, and that kind of disciplined, focused trading. So, folks, if you have any symbols, because we do have about looks like about 15 minutes. If you have any stocks in particular, David, I don't see that the chat. Where would that be? Let's see.
You have to find the Zoom menu and
Oh yeah. Hang on.
let's see.
Zoom screen. Chat. Is that on top? Team? No, there's a team chat. Is that it? Doesn't look like it.
No.
Oh, that's weird. I'm not seeing it.
Do you want me to just read some out for you?
Yeah, that'd be good.
WRBY.
I had a good day today, I think, from what I remember. Yeah. Warby Parker. Now, take a look at, first of all, I'll look at a long-term chart. I see a basic breakout of the real choppiness. I go to a daily. Talk about choppy. Now, this stock was one of my favorites in here when it was running, but I really liked it when it broke out of the base up here. Problem is, it came down, it came up, it came down, it came up. It's very choppy in here. But here's the good part. There's some key overhead support right in the zone. One of the things I look for is when a stock has been in a choppy pattern, but It breaks out of the pattern. This is a channel. It's a 1, 2, 3, 4, 5 wave decline, Elliott wave, basic decline, basic Elliott wave analysis. Then pulls up to resistance and backs off, makes a higher low, and breaks out. I would say that if it gets above 30, and today's high was 28.95, then maybe you have a shot at retesting the 31 range. But more importantly, longer term, this could be a $35 to $45 type stock. As you can see, back in 21, it traded all the way up in the almost $60 range. It wouldn't shock me if his stock made a move into the low to mid 30s and then mid to high 40s eventually. And the on balance volume looks pretty good. I would like better volume than this, but this was a good day for it in terms of total movement. Let's look at intraday again one more time. Yeah, so it started. This is the kind of stock that I normally would have day traded. Here's why. Pre-market pop, and that's a bull flag. And then it broke out, and that broke out right when the market opened, I'm assuming. Indeed, 929, 930. So this was a trade right there for a day trade. It then had an ascending bull wedge, broke out and went up. And the rest of the day, like many stocks, consolidated. So looking at a 15-minute chart, you'll see the breakout and the wedge. I like that look. Again, if it gets over 29, then 30 and 3/4, 31 is your first target, followed by 33, 34. The measured move, which is something I use a lot, 21 to 29, 8 points, tells me that from the pullback low, if you add 8 points, that's 34. My targets are 31 and 34 on a swing trade for Warby. Any other symbols?
No, there's a question. Do you ever use options on higher price stocks?
Well, I don't, but people in my room do, and especially on my swing trades. I'm hearing that some people are making a fortune. Most of my swing trades will do very well. Some of them go up 30, 50, even 100% or even more. I had one stock last year that was up 800 or 900%. And if you bought any of the options, you know how much money you would have made. But I don't use options during the day. I'm too focused on what I'm doing. And you know the old expression, if it ain't broke, don't fix it. Well, I'm not an options expert. There are people in my room who are, but for the most part, I'd have to say I don't do any options whatsoever. But you're more than welcome to do options on my trades, particularly my swing trades. They really have done very, very well.
All
That's the
right.
only. You see it?
SKYQ.
KYQ?
SKYQ.
Oh, I know it well. Um, Sky Quarry, yeah. I don't like this chart, and there's no reason to buy it. And the reason I say that is simply this. When you're in a downtrend, you tell me how long this downtrend is going to last or where it stops. Does it look like it could rally from here? Yeah, and that's because of the gap. A stock will go up, test the gap, probably not fill it right away, and bounce. Do I like it? I'll tell you what. How about this one? SKYX. Check out this chart. I believe this stock going to double or triple from here, and I mean quickly, after a multi-month down channel. And by the way, the stock was David, I believe I put this out as a pick for on one of your seminars at $1.07, and it went to 330, tripled in a beautiful 5-wave LA move. And now it's back down to that support level and breaking back out again. I believe it's going back to 3.25. This time it may be 4 or even 5. By the way, this is a $120 million company revenue-wise and growing. Very interesting stock called SkyX Platforms. You look at the volume and the breakaway gap, I think this stock is imminently going to make a run. And PS is a personal position of mine. But SkyQ, just to go back to it for a moment, again, is there really a reason to buy the stock? I will tell you this, because there's always pros and cons. The pros, look at the underlying green bars and the on-balance volume line making new highs. Very unusual. The stock is being accumulated on the pullback. But my counsel to you would be the following. If it takes out today's high, that's 530, and it does it with energy, then I would look for a swing trade to 7. and then maybe 8.25 or half. Eventually, it could be a $10, $11 stock again. And this is oil and gas. Yeah. I think oil and gas stocks, I'm not surprised to see this at all based on what I'm seeing with the price of oil. Price of oil went from 114 to 90, a $14 drop in what, 3 days, based on the fact that it sure looks like um, Straits of Hormuz, one way or another, is going to open up. All right. Anyway, any other symbols?
How about NBR?
That's another oil and gas, I believe. Yep. Neighbors. Well, this is a beautiful stock, and it has been for a long time. I also like in this group, by the way, APA. That was a stock I picked down in the $20 range and went up to 45. But NBR, well, here's the downside. There's a lot of resistance up here. If it breaks through, you may see 130.40. But for me, any stock that's had this kind of run, if you're in it, stick with it with a stop. Where? I look at prior highs as support, and this bar here, 94. 92.5 to 94 is a support level. Below that, you have 85, 86, the trend line at 50-day. So, I mean, the ideal scenario is it holds here and moves back up to the next target, which is 110. Eventually, 135.38 may be doable if the market continues strong for oil. But if it doesn't, this is a vulnerable stock, in my opinion. It doesn't look bad technically. I'm not seeing any technical deterioration. There's really no reason to sell it until and if it breaks important levels. Any other symbols?
How about CLS?
Oh boy, Celestica. What a chart. Check this out, folks. One of the more incredible stocks. Just since 3 years, it's gone from 10 to 400 and change. So let's just say 40-fold in 3 years, 40-fold. It did it in a 1, 2, 3, 4, 5-wave LE wave move. It formed a consolidation and broke out again. There's no reason to assume this stock can't be $500, $600, $700. Problem is, you do not want to see it roll over and take out 350. That's where I'd stop it. That's 30 points from here. But it's that kind of stock that can do that in one day. Do I love this chart? Yeah, what's not to like? And it can continue to go up, but I'm really wary of a lot of these stocks. You take SanDisk, SNDK, for example. Check this out. Only in August of last year, the stock was 37. And here it is, 1,300. 1, 2, 3, 4, 5 waves up. Do I want to buy the stock now? No, but if I'm in it, I'm holding it until it breaks down. I'd have to say I'd put my stop right there at about 1,048. There's moving average and trend line there. But my target is, believe it or not, $2,000. Unbelievable. Any other symbols?
How about one of my favorites, Palantir, PLTR?
This stock has gone nowhere. At one time, I had this on my short list, and I'll tell you why. Left shoulder, head, right shoulder. There's your neckline. It broke it, and it had a rising wedge right to the neckline. This is where we went short at 155. Within a month, it was 122. So we got 33 points on it. But notice this high and this pullback low and this pullback low. This is a key support level. Palantir is neither bullish or bearish, except I'd have to say, just based on one quick look, it's a bearish pattern. 1, 2, 3, 4. Excuse me. This is either wave 4, and it's going lower. And if it breaks down, it could be a $100 stock again. What I would look for is this to be a left shoulder, head, right shoulder, and for the stock to break out over resistance. I'm not buying any stock that looks like this until I see volume over 150, 55. That's where I buy. I'd rather pay up 20 points and know that it's going, another 50 to 100 more points. But I actually like playing PLTU, the ETF. It's a double bull ETF. This one has dropped from 128. You ready for this? To 30, 100 points. It's still below the declining tops line. Until it breaks back out, I'm not buying Palantir either way. Either one. That's my take.
All right.
Is that it?
How about deck? DECK?
Decker is outdoor. Yeah. Well, the only thing I can say about Deck is that it may be forming some sort of monstrous year and a half long left shoulder, head, right shoulder, but it's not quite the right formation. The bottom line is here again. There are so many bullish trends that I just showed you. Why buy a stock that looks like this? It's all over the place. It's up, it's down, it's back up, it's back down, it's back up again. I mean, it's very volatile. And in essence, it's still in the downtrend. Why? Because you have declining tops and declining bottoms. So until and if it gets over there, I would say over 115, you can buy it with both fists. But even then, you got a triple top at about 122. So again, I need to see better action. Look at the underlying technicals and volume. Flat as a doornail. It's not telling me anything. As a matter of fact, it just ran up to the moving average and VWAP, and if it fails here, and it did reverse negatively today, this stock could be back down in the 90 to 93 range. You got to be really careful with this one. That's my take on Decker. It's not as there's so many beautiful charts out there. This is not one of them. Any more?
Um, no, no more symbols yet. Um,
Okay.
Last chance. Anyone have any more symbols for Harry?
Well, I could leave you with a couple charts.
Oh, GEV. I'm familiar with that one.
Yeah, it's General Electric. Well, what's to say about this stock? In 2 years, it's gone from 125 to $1,200. So basically tenfold. And also did it in massive Elliott wave, 1, 2, 3, 4, 5 waves. So we're everyone. Look, this is one of the reasons why I'm concerned about the market. Do I think the market's top? No. We're making new highs every day. But when the market does top, a stock like this that's gone from 129 to, look, by the time the market tops, this could be 1,500, 1,450 to 1,500. Another 400 points would not shock me. What you got to do is keep raising your stops, like we talked about during the session today. Where would you stop this one? Probably under 980, thereabout. I'm not going to be. Today was not a good day for it, by the way. Down 69 points or 6%. Has this one topped? I can't say it has. If it breaks down here and then goes below this zone, it might have topped. Problem is anticipating a top. Would maybe thought here was the top or here was the top. The bottom line is keep raising your stops until the stock breaks on you. Now today could have been the beginning of a much bigger down move. 69 points is nothing to sneeze. Excuse me, 73 points, nothing to sneeze at. 1,046 after hours still dropping. Take a look. They must have had earnings or something. Anyway, the stock today dropped from 1121 to 1040, lost 80 points top to bottom. The overall chart pattern, it shows that it's at support. It doesn't hold here. Secondary support is about 60 points below here. Be careful with this one. It's way, way, way overbought and extended, and in a fifth wave, which might be a 1, 2, 3, 4, 5. So we call this Elliott wave fifth of the fifth. When you get 5 waves within a fifth wave, it's time to sell. The odds, the risk reward is too much for me on the stock like that. I don't care how good a company it is. Look at the run on it it's had. A stock goes up, what did it go from 120, went up tenfold, 1,000% in 2 years. So we're coming to the top of the hour. Anybody else with a final question? Or is that it, Dave?
Oh, one more. IBKR.
The broker. Interactive. Well, here's another one. Big move. 13 to 83. Here's a weekly chart. Is it overbought? You betcha. Did it have a bad day today? Yeah. Is it top? You can't say that. What do you want to do with a stock like this? Know where your trend lines are? I would say at the top of the channel means we're overbought and extended. Unbalanced volume line. Look, the stock makes a higher high on lower OBV, a negative divergence. Underlying technicals are not showing me anything volume wise, maybe a little bump here. But anytime I see a stock like this, my tendency is to want to sell it. I guess that's it, right, Dave?
Yeah, that's all. So thank you.
My pleasure. And don't forget,
And
folks, if you go to thetechtrader.com, you can join me for free for 2 weeks. Just click on the join for free button. No credit card necessary. Just come in and see what we're doing for free for 2 weeks and join the party and have fun every morning and make some money. This is HB Sun, otherwise known as HB, Harry Boxer, the technical trader. Dave, once again, thanks for having me and appreciate being here. I'll look forward to doing it again. Bye, everybody.
thanks, Harry.
Okay.